Hello, my name is Yana and today I want to present you a presentation on the topic Social Security, Medicare and Unemployment Taxes. Also, we're going to review the article. Learning objectives, Social Security taxes, Medicare, unemployment taxes, an article review. Millions are suddenly working from home. Can they claim a tax break? First, let's talk about FICA taxes, which include Social Security and Medicare taxes. There are certain taxes on income that everyone has to pay, and FICA taxes are at the top of the list, and employers must withhold these taxes from the employee's paycheck and pay them to the Internal Service Revenue. FICA taxes are the Social Security and Medicare taxes paid by individuals and employers. FICA taxes are also called payroll taxes because they are based on amount paid to employees. Social Security and Medicare taxes. In this presentation, we find out about how to calculate FICA taxes and how to report and pay these taxes, what earnings are not part of FICA taxes, and more. The FICA taxes is short for the Federal Insurance Contribution Act. The act was introduced in 1930s to pay for Social Security. Medicare was added later. The breakdown of FICA taxes. The total FICA taxes is 15.3%. That percentage is applied to the employee's gross pay. The employer and employees each pay 6.65%. Here is a breakdown of these taxes. Within that 7.65%, the portion is 6.2% up to the annual maximum wages subject to the Social Security. The Medicare portion is 1.45% for each employee and all employee earnings. In October 10, 2019, the Social Security Administration announced that the 2020 Social Security wage base will be $137,700. From this table, we can see who pays taxes in what portion, in what is the employee part, what is the employee's part. What wages are subject to withholding? The IRS says that these FICA taxes are due on wages paid for service performed as an employee in the United States, regardless of the citizenship or residence of either the employer or the employer. In other words, anyone working as an employee in the United States must pay Social Security and Medicare taxes. At that time, the employee is paid and the FICA taxes is calculated on the gross pay of the individual. Here how it works. The employee's gross pay is calculated for the pay period depending on whether the employee is salaried, hourly, or monthly. The gross pay amount is used to calculate withholding for federal and state income taxes based on the employee W-2 form. The gross pay amount is also used to calculate withholding for the FICA taxes. Here is an example. Let's assume Paul earned gross pay of $400. These current year taxable earnings for Social Security tax up to date are $83,900. The solution: current period taxable earnings of $400 are added to the year-to-the-date earnings of $83,900. The result is $84,300. Result doesn't exceed the taxable base of $137,700. Social Security tax for these employees is $24. Medicare tax is $5.80. What income doesn't count for Social Security? The first $20 of most income received in a month, the value of Supplement Nutrition Assistance Program food stamps received, income tax refund, home energy assistance, assistance based on needs funded by the state or local government or the Indian tribe, small amounts of income received irregularly or infrequently, interest or dividends earned on countable resources are excluded under the federal laws. Grant, scholarship, fellowship, or gift used for tuition and educational expenses, food or shelter based on needs provided by non-profit agencies, disaster assistance. Now let's talk about FUTA taxes. FUTA, the Unemployment Tax Act, is the federal law that requires employers to pay unemployment taxes. These taxes fund the federal government's oversight of the unemployment program in all 50 states. Typically, only employers pay FUTA taxes. Every employer must calculate its FUTA tax liability for each payroll, set aside an amount after each payroll equal to that liability, make periodic payment to the IRS based on the amount owed, submit an annual report and a Form 940 employer's annual federal employment tax return. Also, employer must not pay FUTA taxes. However, FUTA and SUTA taxes rates may not be the same. Calculating your FUTA tax liability. You must pay federal unemployment-based taxes based on employee wages or salaries. The FUTA tax is 6% on the first $7,000 of income of each employee. Most employers must receive a maximum credit up to 5.4% against the FUTA tax for the allowable state unemployment tax. Consequently, the effective rate works out as 0.6%. Now we are going to the second part of our presentation. This article review is from the Wall Street Journal named "Millions Are Suddenly Working from Home. Can They Claim a Tax Break?" written by Laura Sanders. This article is about coronavirus pandemic, working from home, what expenses can be deducted from income and reduce taxable income. Purpose of writing this article: does your remote work qualify for any tax breaks? Now, let's read some important ideas for this article. Due to the coronavirus pandemic, millions of Americans are forced to work from home. Both employers and employees are wondering how they will pay taxes and expenses they can deduct. Most from these people must convert their bedrooms to offices. This means that people must buy chairs, tables, and some of the even computers. Employer will pay increased utilities expenses. Whose responsibility is in the informed situation? Who can claim its expenses on tax purposes? One was a partial deduction of reimbursement employee expenses such as home office or union dues, but employers can claim this deduction based on the reimbursement of the workers. The good news for the workers is that the breaks can help employers with a range of pandemic expenses, and the payments don't count as compensation either for income or FICA taxes. A simple way of many employers to help employees who have costs from working at home due to the pandemic is to reimburse them under the Section 139 of Federal Tax Code. This law passed in the wake of September 11 terrorist attacks and allow reimbursement or payments for reasonable and necessary personal, family, living, or funeral expenses due to an eligible disaster. No, this law allows a deduction for payments or reasonable expenses that seem intended to be more general than ordinary expenses, the term elsewhere in the law, says Mrs. Murphy. It could include, say, full reimbursement of expenses for child care as well as for computer or additional utility cost. Under Section 139, disaster payments can be tax-free for workers and deductible by the company. Shareholders who are also employees of an S or C corporation qualify for them as well. Directors and partners may be eligible for these payments, although the law isn't clear. Unusually for this tax code, Section 139 cuts red tape. Payment don't have to be included in on workers' W-2 tax form, and company doesn't have to document actual expenses as long as the payment is expected to be close to them. Complex employee benefits rules about workers get what benefits don't apply either. Now, conclusion. Today we talked about the FICA taxes. We defined what is included in FICA taxes, Social Security and Medicare taxes. We defined how to calculate Social Security along with the Medicare taxes. We talked about FUTA taxes, namely rates. In this presentation, we also talked about an article that was written by the Laura Sanders. The most important points in this article is namely how millions of Americans working from home due to the coronavirus pandemic will qualify for any tax breaks. Conclusion was made by me was, after this reading an article, is optimistic. Here are the sources that I use to present you my presentation, and thank you for the attention.